Hello, everyone. I'm Sasha Gibali, SVP of Strategy at the TIE, and today I'm excited to be joined by David Kramer, COO, and Viv DeWalker, CIO from the HBAR Foundation for the first edition of our State of the Hedera quarterly call. So we'll cover today several topics around Hedera, starting with a brief background and history of the protocol before discussing the important advancements in 2023, highlights from the past, the fourth quarter, and from there, we'll close with what we can look forward to for this year. Let me remind you before we get started that the information contained in this webinar is for information purposes only and should not be considered as investment advice. So let's get started. Given that's our first quarterly call with you, let's kick it off and with some background about Hedera. So what is Hedera? How does it differ from other layer ones?
Yeah, great. I'll go ahead and take that. So hi, Sasha. Thanks for having us. Thanks for having Devin and myself. And thanks to the TIE as well for this opportunity. And also say hello to everybody out there who's taking the time to listen to this webinar. So to start with, at a basic level, Hedera is an open source proof of stake network. Hedera is powering the next generation of the web. And some of the key differentiators for Hedera really break down into two different categories. Those are technology features and then the overall approach to network governance. On the technology side, the network has been intentionally designed so that it meets the needs of both enterprise use cases as well as Web3 applications. It means Hedera is in a unique position to be able to deliver speed, scalability, and security, all of that with low and predictable costs. And some of these technical differences that we're going to highlight between Hedera and some of the other L1s that you'll see become critically important for many of the different use cases that we're looking at. A few examples: real-time finality is imperative for some of the financial use cases that we're looking at, where you can't have the risk of a rollback. Extremely low and predictable fixed costs, or costs that are fixed in US dollar, allows enterprise use cases to be built and to predict operating costs without the risk of wide variances. And the ability for a network like Hedera to scale to handle an extremely high volume of transactions is critically important for some of the potential high volume use cases that we've got, looking at the network. An example of that would be, the Opera.io platform from Avery Dennison. On the governance side, our network is governed by the Hedera Governing Council. This is a group of international, highly diversified global organizations, each of whom have a single vote. Some of the examples of these companies are Google, Dell, IBM, Boeing, ServiceNow. That just names a few. We have more than 30 members at this point. This approach is mature and it's trusted, and it isn't seen anywhere else in the industry. We haven't seen another L1 that has a similar approach to governance, and we think it provides an unmatched level of trust and stability for the network. A couple other data points for the network. Open access for mainnet was back in September of 2019, so we're a little over 4 years into the journey. And since that time, Hedera has been focusing on a decentralized approach to the growth and maintenance of the overall ecosystem. This includes an ecosystem development organization like the HBAR Foundation, where Viv and I both work, along with other special purpose ecosystem development orgs that have formed as well, and also Swirlds Labs, which is responsible for protocol level engineering and development, developer support programs, and overall marketing for the Hedera ecosystem. That's a pretty cursory overview of what comprises Hedera, and I'm fortunate to have Viv here in case we want to go any deeper on the tech side.
Yeah, so maybe let's shift gears and talk a little bit about the consensus mechanism. So Hedera uses a hash graph consensus mechanism. Can you tell us what does this mean? How does it work? And how is this a differentiator for the Hedera blockchain?
Thanks, Sasha. So I'll echo David's words first. It's a pleasure to be here with our friends from the TIE, and thank you everyone who's also dialing in. So first of all, Hedera is a DLT, not a blockchain, and there are some material differences that come with being a DLT versus a blockchain. So insofar as consensus is concerned, Hedera uses gossip about gossip with virtual voting to come to network-wide consensus. So what does that mean? That's a lot of words there. So for any blockchain or DLT, the purpose of consensus is to come to agreement on what the current state of the network is, based on the transactions that are coming in and, proposing modifications to the network. It could be transfers of crypto, of NFTs, of, account balance queries, whatever it might be. So on the Hedera network, these transactions are submitted to a class of nodes that we call our consensus nodes, who then consult among themselves to decide the ordering of messages. And when we say, consult among themselves, this is also around what state changes should or shouldn't happen, whether there are balance updates, who should receive what token, etc. Sticking with the similar example that I used. So the consulting between the consensus nodes that happens via a gossip protocol. Now, what that basically means is any node on the network, David mentioned our governing council, they all run nodes. Any node in the network will randomly pick any two other nodes and relay everything that they know as messages. What they also include is the time that they receive these messages. And basically what happens is if one node tells two, the two tell another two, and so forth. So you have at a quadratic, at an exponential rate, really, that information is broadcast across the network. So once the whole network has all these messages and times, each individual message, the timestamps on these are ordered, and the median is taken, and this gives you a relative ordering of all the individual messages relative to each other. So what you get for free using the hashgraph consensus mechanism is completely fair ordering. Now, the relative ordering is tied together with cryptographic hashes within each message, and this forms a data structure called a directed acyclic graph, or a DAG, and this is the hash graph. So in order to keep the hash graph up to date, the nodes in effect are indirectly gossiping about the hash graph itself, as well as the messages, if you will. So this is gossip about gossip. Now, you have a structure that holds messages, you have all the ordering, you have the timing, and all this sort of thing. So now what do we do with this? So this is kept in memory on all the consensus nodes, and this gives a complete history of transaction, which means there's no need for the nodes to start talking to each other about, timestamping or sending any other additional synchronization messages or receipts across the network. Which means in order to know the order of transactions, which is very important for financial services use cases and the like, all a node needs to do is look at its own hash graph data structure in memory. So it doesn't need to ask for votes, and this is what we call the virtual voting piece. Now, all that was, a condensed version of how, the protocol works. But more to the point, why should you care is probably the bigger question. So immediately, virtual voting means that Hedera is not a chatty protocol, and gossip about gossip adds very little network overhead. So this means automatically you have the potential and the realization of a high throughput network. It's also leaderless in that all the nodes participate in consensus rather than having specific nodes that being elected, if you will, as you see in leader-based systems, so you get complete fairness. Now, the other good thing about the random nature of gossip means that you have fair access for messages to propagate throughout the network, because you can't have any sort of concentration attacks and the like where only certain messages are getting through and so forth. I already briefly touched on the way timestamping is done and the relative ordering. So this way you get completely fair queuing of your messages and your transactions, basically. So this eliminates some kinds of front-running attacks, civil attacks. So from a security perspective, it's a very, very safe and secure protocol, and it's been proven as such. Now, again, David mentioned financial services use cases. The fair ordering of transactions is absolutely critical, especially if you're looking at, balance operations like credits and debits and so forth, which could succeed or fail based on availability of balances, which depend on fair ordering of transactions. Now, extending that on that a little bit, when we talk about reaching consensus, if you think of blockchains, you end up with a block being written and so forth, but this is probabilistic finality, because it's only as more and more blocks are written, there's less and less likelihood that a given block that contains your transaction is going to be pruned and therefore rolled back. with Hedera Hashgraph, finality is absolute. So once the network agrees something happened, there's no going back. So again, from a financial services perspective, finality is a key piece. So to summarize, what do you get? You get completely fair access, timestamping, and ordering, and you get fast and absolute finality. And then if you think of some of the services that are built on top of Hedera, we have a consensus service. So this allows any distributed app out there to directly access the speed, finality, and fair ordering benefits of the Hedera Hashgraph. And this is great for use cases that need authenticity and provenance, fair ordering of transactions, guaranteed delivery, queuing, that kind of thing. We also have a native token service, and this allows for the entire management of a token lifecycle. So we're talking creates, mints, burns, etc., without the need to resort to smart contract. So this is great for collectibles, loyalty, let's say shares, dividends, tokenization style use cases. And then extending that further, if you want the additional autonomous logic and programmability, things like triggered workflows, custom governance, then our EVM layer allows for deploying Solidity smart contracts to give you that as well. So that's kind of Hashgraph consensus in a nutshell and what we've built on top of it.
Very interesting. And so on the governance side, guiding Hedera is the governing council that comprises very prominent organizations like Google, Nomura, and Boeing, just to cite a few. I'm curious about the council's specific decision-making processes and responsibilities within the network governance structure. Could you elaborate on how this approach to governance compares with other projects and differentiates Hedera from other blockchain networks?
Yeah, certainly. So to start with, and Viv touched on one piece of this, the core responsibilities of the governing council members are actually, it's a pretty short list. They agree to operate one of the nodes for the network, and they agree to sign transactions on the network that implement the decisions of the governing council. Beyond that, the governing council to stay active and engaged in the overall governance and happenings of the network itself. The governing council meets on a monthly basis. Twice a year, those meetings turn into fairly rigorous face-to-face affairs that cover several days. For many people, a full week, because it involves travel, a lot of travel, so people make the most out of that. And you'll have the ecosystem development organizations like the HBAR Foundation, like Swirls Labs, also participating in those face-to-face meetings. Beyond the regular governing council level meetings, the governing council functions through a series of committees that are co-chaired by representatives from each of the member organizations. And the rest of the committee will be comprised of representatives from the governing council member organizations. And then you have additional participation in those committees from Hedera staff and other invited guests and experts like HBAR Foundation and other identified people. These committees focus on all aspects of the network, including membership, so recruiting and so-called care and feeding of the members of the governing council, corporate utilization and adoption, which focuses on some of the large corporate and enterprise use cases and making sure that the technology continues to be suitable for those. Technical steering and product, which is core protocol level features and responding to HIPs and things like that. Treasury management, coin economics, legal and regulatory compliance matters, and marketing, to name just a couple of those. And as I mentioned previously, this type of governance model, this engaging and relying on the trusted reputations of these global organizations, isn't seen anywhere else in the blockchain industry. And we think that a model of governance like this provides better fairness, better stability for the organization and ecosystem itself, and really offers a decentralized decision-making for the Hedera ecosystem.
And yet, despite the bear market in 2023, The HBAR Foundation reported impressive year-over-year growth in transaction volumes, accounts growth, and network revenue as well. So 30 billion transactions and revenue grew nearly 1,000%. What do you attribute this to? What strategies does Hedera plan to continue this positive growth trajectory in the future?
Yeah. Thanks for bringing it up. I mean, overall, we were pretty pleased with how 2023 went. It was a pretty tough macroeconomic climate for sure. It's first important to note, I think, that a lot of the performance and the results that we saw in 2023 is the result of seeds that were planted over the last several years. And while it's true that we're a grant-giving organization, our role really just starts with the grant rather than ending at the grant. So our team last year spent a lot of time working directly with the various projects in the ecosystem that we had been supporting and helped them navigate a pretty tricky period. And we saw, a number of pretty meaningful projects hit mainnet that contributed to the results that you saw. Regarding the overall, is kind of the dramatic increase that you mentioned in transaction volume, 30 billion plus transactions. It's pretty easy for people to just point to the release by Avery Dennison of their Optima.io platform. And when you see that type of a dramatic jump in overall network utilization, you're obviously going to see a commensurate increase in the associated revenue as well. But there's more to the story. I mean, there's a number of really interesting highlights from 2023 that I think get overshadowed by those large headlines. Some of the examples are on HTS, or our token service revenue. We saw 124% increase year over year in revenue from the HTS service. And this is despite a fairly dramatic decline in NFTs, which I think every ecosystem experienced. But that was countered by pretty substantial growth that we saw in our fungible token projects that more than offset that decline that we saw in NFTs. We also saw pretty solid growth from both our crypto transactions, which grew over 150% year over year, as well as in the adoption of the smart contract service, which was up nearly 50% year over year. And one of the things we were really excited about, because you need users to be able to grow the network and to see that type of exponential growth. We had really incredible growth in our new accounts. This is across all service categories. We were up nearly 200% year over year, adding over 2.7 million accounts to close the year with over 4 million total user accounts. We saw really good contributions to the user growth coming from projects like Karate Combat, as well as Zenny, which is a travel platform. And the stats are that I shared to sort of like break down one level are really important, because the mix of the different network services that we have matters a lot to our overall network revenues. We talked about the consensus service, and a number of our really large projects use the consensus service, and HCS comprised around 99.7% of total transaction volume on the network. But even though it represented that much volume, it only represented just over 86% of network revenue. That means the remaining 0.03% of transaction volume contributed almost 14% of the network revenue. So as we look in 2024 and beyond to build on the performance that we had in 2023, we want to maintain our focus on driving a really healthy mix across the different network services that we offer. And as a result, we want to focus on projects and use cases that are going to drive that usage and sustain that sort of mix. We're also going to continue to focus maniacally on grant quality and continuing to nurture the grants that we've made so that we can bring more and more quality products into the ecosystem.
Yeah, so as you touched a little bit on this, right? But throughout 2023, a number of institutions launched applications on Hedera, right? And by like Drop, micropayment solutions, or Xeni that you brought up, a travel ecosystem. Also, Aberdeen, a major asset manager in the UK, chose to tokenize the money market fund on Hedera. So tell us a little bit more about what Aberdeen is trying to accomplish, why they chose Hedera, and what has been the reception thus far.
Sure. I feel like I'm hogging Viv, but you'll get your chance soon. So Aberdeen was a really exciting addition to the ecosystem, and really they chose to join the Hedera ecosystem for a number of the reasons or the network attributes that we've already mentioned earlier. Principally, predictable fees, security of the network, scalability for enterprise and financial use cases, and importantly, an opportunity to participate in the governance of the network. So they, shortly after joining, they launched their first use case, which was tokenization of their money market fund. Now, money market funds, I'm not sure if everybody's aware of how they traditionally work, but traditional money market funds come with some administrative burdens around same-day redemptions and reinvestment of associated returns on same-day redemptions. But when fund ownership gets tokenized on a blockchain, investors are able to receive those same-day payments, and then you have automatic reinvestment of the associated income, which comes in the form of an airdrop token directly into the investor's account. So from the user's perspective, they see a benefit of real-time access to their money, as well as fewer administrative demands and hurdles. This product was launched on Archax, which is a regulated digital assets exchange in Europe. And so far, the response from the market was better than expected, in particular from some of the traditional corporates, things like payment companies. So I think the takeaway from that is that tokenization of money market funds is just the first step for Aberdeen and what they're planning to do. I think we expect to see more products coming to market from them that leverage tokenization of financial products, and we plan to take the positive experience from that and take it into the market and look for other opportunities to replicate it.
Sounds great. And speaking of tokenizing financial products, there's a big topic which are stablecoins. So at Token 2049 in Singapore last September, you announced Stablecoin Studio, right? An open source stablecoin issuance and management toolkit. What is Stablecoin Studio? What is its significance, and who is using it?
Sure, I'll take this one. So I guess before we get into the studio, if you think about stablecoins in and of themselves, like what are they trying to achieve? So they're trying to combine, the programmability and the ease of transfer that is, seems to be what cryptocurrencies are really, really good at, with the stability of fiat currencies. But this is not an easy thing to do in practice. And, you have challenges around the issuance, the access control, permissions management, KYC and AML, especially, where regulated entities are participating, audit requirements, etc. These are all key challenges. So the Stablecoin Studio is an open source toolkit that was built on top of the Hedera services that I mentioned earlier, and in particular the smart contract service and our token service that facilitates compliance by design. So it was created by Hedera, Swirls Labs, the HBAR Foundation, and one of our SI partners, IO Builders, to address these challenges in a comprehensive way, but also give sort of the streamlined tooling to make issuing and operating stablecoins simple. So it's fully open source. It's a collection of Apache 2 licensed components, and out of the box, you get an SDK and a management, command line interface. So this allows you to programmatically define, build, and manage the lifecycle of stablecoins without, ever needing DLT or smart contract expertise per se, because they also come bundled with some fully audited smart contracts. So we use a hybrid architecture between our token service and our smart contract service. So using native token service, you get ERC20 compliant tokens, which have all the properties that we covered earlier, like low fixed fees, fast and absolute finality. And you also get all the programmable properties of our HTS service. So this includes, flags for native KYC, and this again is for the compliance piece. We also have integrations with Elliptic and Merkle Science Services to facilitate this as well. If you need additional programmability, we have pre-built smart contracts available as part of the studio. So you can use the smart contract service to define custom issuance schedules, vesting, governance, and these smart contracts, as I mentioned earlier, have been fully audited by CertiK. We also have APIs and integrations sort of, front and center, so to speak, because we have hooks leading into custody providers like Fireblocks, Zodia, and BitGo, and this will help, automate asset custody and security. And these are like some of the heaviest hitters in the industry. It also comes with a demo front-end application to, help people reason about what can be built and, and also use some of the components. It also has proof of reserve for treasury management, and there's also an interactive sandbox that you can connect your Hashback or MetaMask wallet to and issue stablecoins. And, I was playing with it and I was able to issue my own stablecoin in literally 5 steps. So why is this significant? So it allows for real-time settlement and FX rate integration across mainstream fiat currencies. And this can be done at volume when you take into account the speed of the Hedera network. Being programmable, it also means that the issuances can keep pace and also evolve as regulatory and compliance requirements change. It's the programmability is on the EVM layer. So it means EVM-based stablecoins can be integrated into trading in future, even if they're not necessarily issued through the Stablecoin Studio. Now, I also mentioned under the hood it uses HTS, so you have the cheap, fast, and final transactions. And so far, we have Cathay Bank, Jewel Bank, Standard Bank, and Shinhan Bank using our Stablecoin Studio. From the solutions provider's perspective, we have SCB TechX. And from a settlement layer technology perspective, we have Revere Finance, who are actively using our Stablecoin Studio.
Very good. So let's dig now a little bit into Hedera's DeFi ecosystem. Right. So Saucer Swap DEX, decentralized exchange on Hedera, achieved record TVL in 2023. How do you think about DeFi on Hedera going forward? What are your plans, and can you share how you're planning to grow this vertical in 2024?
Yeah, sure. Yeah, no, I appreciate you pointing out the performance by Saucer Swap. Not only did they hit a record TVL, but when you measure it in HBAR, they also saw 2x growth in TVL. So overall, they're doing really well. We're excited to see them continue to grow and have traction. I think generally when we think about DeFi on Hedera, we're happy about the progress that we've made. I think we're pretty optimistic about seeing continued growth this year, and as we move forward, we've got a lot of work or a lot of opportunities to add to the ecosystem. We think Hedera is overall a good place for DeFi, a good ecosystem to support DeFi use cases. Some of the network features that we've discussed have a real positive effect for DeFi projects. Specifically, you see speed and low cost having a real benefit to the overall user experience. Trades happen faster, fees are really low with no surprises. Viv mentioned not having to worry about front running because of the design of the network. So overall, it's a really good user experience. We just need to see more growth. In terms of specific plans for 2024, I don't think we have much that we can share specifically today about how we're going to look to grow in 2024. I know we're going to continue to focus on fundamentals. We'll continue to focus on nurturing and supporting the existing projects and helping them reach their goals of attracting more users. We also recognize that we've got gaps to fill on both the lending side and borrowing side as well. So we definitely still have work to do. There's definitely still opportunities in front of us.
Great to hear. And so changing topics slightly, in December at the COP28, the 2023 UN Climate Change Conference, the HBAR Foundation announced a platform for measuring, reporting, and verifying carbon markets. Can you give us a little bit more background on this initiative? Why is it important for Hedera, and who do you see as the users for this platform?
Sure, yeah. The Hedera Guardian is a flagship project for the Hedera ecosystem. It's sponsored by the team in our Sustainable Impact Fund here at the HBAR Foundation. Fundamentally, the Guardian makes it easier for governments and nonprofits and companies to come together and enable measurement and reporting and verification for climate accounting. At its core, it's a decentralized workflow engine that structures rules and data on Hedera and allows the organizations to define these complex scientific methodologies, and then they can fully digitize those so that it can be proven, and all of the data can then be linked to a tokenized unit of value, something like a metric ton of carbon. Where you can then see all of the associated information to that unit on chain. Users of the Guardian, that's generally any organization across the ESG value chain that wants to credibly track their emissions and then leverage these assets in ESG reporting, or they want the carbon credits that they're purchasing to come with a full audit trail so that they can trust that the information is real. And ultimately, they can take these assets and they can display them themselves, or they can retire them and claim that they've reached net zero on Hedera. So a high-profile example of a user of the Guardian in our ecosystem is Avery Dennison with the Atma.io platform. But really, anybody that has sustainability initiatives becomes a potential user of the Guardian. So we see a lot of growth potential in this market, and it's a really big market opportunity for us. And we think we've got technical features that enable us to do things that other ecosystems can't do.
Yeah, and in speaking of the ecosystem, right? In 2023, the HBAR Foundation committed $16 million across 68 grants. That marks a strategic focus on nurturing existing grants, supporting specific sectors like infrastructure, media, also entertainment, right? Could you share insights into how the Foundation's grant program is shaping the development that's taking place on the Hedera ecosystem? How do you select the recipients, and what impact these grants have, particularly in areas where funding was most concentrated?
Sure. So I guess I'll start with, our selection process, and this is something that we've been focusing on literally from day one, and is still very much something that gets our undivided attention, and we continue to evolve it. So there are 4 key stages of our grant process. So first of all, there's application. So this is done through the Foundation website, and applicants submit their application, and then this goes into queue for review by our BD team. Now, it then is either qualified or not, and the qualified ones then go further along into our due diligence phase. So this is where we spend most of our time actually working with the grantees. So the BD folks work with the grantees to tease out what's the value of the grant based on different metrics. Is it utility that it'll bring to the network? Is it value that it'll create, how it lines up with our strategic outcomes, growth areas, and a host of other criteria that are both fund and overall foundation specific. And at the end of this, there's a proposal for what the grant is going to look like. The proposal then gets a technical review where we look at things like feasibility, cost evaluations, architecture and service use, milestone definition, success criteria, and so forth. And we work very closely with the grantee to refine this over and over until all parties are satisfied. Then it goes over to finance review. At this point, things like payment amounts, the timing, payment instruments that'll be used are finalized. And all the while, in these countless meetings that are happening with different members of THF, we're always on the lookout for any potential red flags or anything like that. After that, it goes through 2 rounds of committee approvals. The first one is the HBAR committee, which is more so within Foundation. And this is a very critical review. We ask clarifying questions. If there are any requests for revisions, this is where it happens, and everything is sort of hammered out. Then it goes for final approval to the Foundation committee, and then it's over to our legal team. So here, a legal agreement is drafted, and then we have third-party providers who conduct KYC, KYB on the grantee, and if everything checks out, then the digital contract is sent to the grantee. Now, David mentioned, our work doesn't end with the grant, it pretty much starts with the grant. So at this point, we provide a lot of support to our grantees. So everything from technical, we help them, work through any of the challenges that they're having during the build stages. As they're getting closer to going to market, we pair up with our resources from marketing around press releases, joint announcements, that kind of thing. And of course, there's the financial side of the support that we provide. So I guess the impact of, the rigorous process that we've put in place means that, by the time someone comes out the other end and the legal agreements and all that are signed, we've already spent a lot of time and sort of sown the seeds towards a successful grant, which means overall our efforts and level of failure, if you will, from what goes to production is significantly reduced and mitigated. And it also means that we can be very targeted and strategic in how and where we deploy our capital, and also understand ahead of time very clearly, what the impact is going to be and over what time period and to what scale.
And so last year you launched the Project Insight, right? So what is Project Insight, and what purpose does it serve for Hedera and the ecosystem?
Sure. So I think one of the biggest things that we focused on early on was go as broad as we can, as deep as we can, as fast as we can. And then, very quickly we came to start asking, questions internally, like, how are we and our grants performing? So Project Insight was launched last year, and it's a real-time analytics platform that combines network data, everything that happened on the network, with internal grantee data to give us a view of the impact, both now and the future impact that our grants will have on the network. So at a high level, it gives a view of treasury, overall health and performance of the fund, but it also allows us to drill down into, even individual grant and milestone level reporting to understand, upside and impact, and also, help us make decisions on, where we continue funding, where we make adjustments, and so forth. It's still very much in the early stages, and today we can pretty conclusively understand, how are we and our grants performing, and some of the numbers that David was able to mention earlier in terms of year-on-year growth, in terms of the distribution of revenue across different services and so forth. All this comes out of Project Insight. Now, where this isn't a one and done. We're pretty far from where we want to be with the product. So future iterations will also focus on forecasting, differentiating grantee activity versus organic growth activity on the network, and getting a more refined and a richer view of the Hedera ecosystem as a whole. But then again, looking at the way Web3 as a whole is going, it's not just about us on our little island. We need to be able to understand, what some of the other ecosystems are doing as well. And, we have our partners like the TAI, who we work with quite closely to get these insights. But equally, how do we take all of this and get a unified view of how we're doing, how our network is doing, and what our focus areas should be for future growth and profitability across the network, and also our grantees and builders and community.
And based on all those insights that you've gathered, so what are the grants program that are going to be available in 2024? And what are the particular areas of focus that you intend to have, and where do you want to attract development in the space?
Sure. Yeah. One of the things, just building on what Viv mentioned, that one of the benefits from a fully functional Project Insight is that it will help us in the future make decisions about the grant programs and the grant structures that have proved to be most successful in terms of taking a dollar and turning it into network utilization that's a multiple of that. And so we're going to continue to feed that information back, all the information we have into Project Insights, so we can get those types of decision-making benefits. In terms of 2024, we are going to continue to focus on infrastructure to support the overall growth of our ecosystem. We also are going to be rolling out a number of programs that are going to be very developer-centric. We want to be the most friendly ecosystem for developers in the industry. In addition to that, we obviously still believe in the work being done and the underlying theses of our 4 original funds. So we're going to continue to support development in those areas, and also continue to nurture the grants that have already been made by those teams to bring those products to mainnet. And in terms of some other specific areas where we're exploring and being very active in some of the conversations that we're having, we think the media and entertainment space is really interesting, specifically projects that are leveraging well-known IP to engage consumers. And we're continue, as I mentioned before, we continue to be engaged in a lot of conversations with financial institutions and in capital markets broadly, which we think is a really big opportunity. And we see that opportunity, as I mentioned before, to be able to leverage some of the good work that was done by Aberdeen to show kind of what's possible in that space. And then there's obviously a growing amount of interest in AI and specifically the intersection of AI and blockchain. You see this growing concentration of power in Gen AI, and the companies leading in that space. And this creates a bit of a risk. So we see, as others do, an opportunity for the decentralized data model from blockchain to mitigate some of those risks. I know this was a big topic of conversation recently in Davos, where you saw a number of announcements of products exploring this space, including an announcement by Equity Lab of an AI integrity platform that is integrating with Hedera. So those are some of the areas where we're focusing and hope to have some success this year.
And what hopefully, together with those successes for this year, what are the biggest challenges that you foresee in scaling the Hedera network and increasing its adoption, not only among mainstream users, but also institutions? How does the foundation plan to address these challenges in 2024?
Yeah, sure. Look, we're as critical of ourselves as anybody else. And while I think this is a bit of a macro problem for the entire industry, we need to be constantly focusing on the overall user experience. And that's not just the user experience for retail users, but it also extends to the experience that developers have and enterprises and other institutions when they're interacting inside the Hedera ecosystem. We need to be easy to use. We need to be easy to start using, and we need to be easy for you to continue to use. And we think this is how ultimately you start to kind of win hearts and minds. So for the retail side, we think a lot about how we can get better with the fiat to crypto on-ramps and off-ramps. We know we still have work to do there to enable a much simpler user experience. And this isn't just in the US with USD, but it's also outside the US with some of the various local currencies. We think about wallet infrastructure and how we can bring Hedera closer to the experiences that people are already familiar with. An example here would be the MetaMask Hedera wallets now. For the projects that we're supporting, this also means that we're focusing very heavily, a lot of our resources on and decision-making around product quality. We want to back teams who are highly focused on user experience and product iteration once they've been able to determine or land on product market fit. I think some good examples of that where we've seen success is Hashpack and Blade, which are two of the wallets in the ecosystem. One's a B2C wallet, the other's a B2B2C offering. And it's also why we focus on infrastructure like Wallet Connect. On the enterprise side, we've actually been making quite a bit of progress with many use cases that are under development from the different members of the governing council. So I think we'll continue to look to deploy a lot of resources there. And we're also broadly across the enterprise space, we're looking to move the dev tools, the infrastructure that those institutions and the enterprises are already familiar with, and move them onto Hedera so we can enable a better, more seamless development experience.
And can you discuss the foundation strategy for selecting and collaborating with partners? I mean, what criteria do you use to ensure that partnership aligns with Hedera's mission? What are the strategic goals? What are your core areas of focus? Is it tokenization, DeFi, et cetera, et cetera?
Sure. So I guess, rising tide floats all boats, right? And the success of Hedera will also be driven by the broader success of Web3. So to give you an example, we partnered with HBAR Foundation to launch the DREC Alliance. This is a decentralized recovery system for digital assets. And this helps, all of Web3, not just us. And it aims to streamline the process of securing and recovering digital assets. And in a way, this also paves the path for other elements like standards around secret management and common practices and familiarity, and more than anything, transferability of familiarity. So in a way, when we're picking partners, it's not just about what's going to benefit us immediately, but also what benefits the ecosystem as a whole. Then in a similar vein, if we're assessing the needs of our ecosystem, both the incumbents and the entrants, are we partnering with someone who's best able to fill some of the gaps? So are we finding the right SI partners, the right, tokenomics and advisory partners? Building a decentralized app is one thing. Taking to production has other sets of challenges. Do we have the right operations partners, and so forth? So in terms of are we picking a specific area like tokenization or DeFi or so forth? The short answer is, in a way, all of the above. It's more about making sure that we have the right collection and combination of tools that are composable and easy to use, that facilitate all classes of use case, whether it's retail or enterprise, whether it's tokenization or DeFi or collectibles or loyalty, whatever the case might be.
And also in a recent Twitter space, right, expanded growth and liquidity for the HBAR economy were really highlighted as key focuses for 2024. Could you tell us a bit more about the specific strategies that Hedera plans to implement to achieve these goals?
Yeah, sure. We recognize that there's room to grow here, and so we are evaluating, developing some strategies around ways that we can increase overall liquidity in our ecosystem. One of the top priorities is growing the amount of USDC on Hedera. That's a key priority for us in 2024. And we expect that we can see more growth around the USDC asset on Hedera, not just as a standalone asset, but also potentially we'll see it as a transfer or support asset, for other stable coins and on-chain finance generally. Some of the other things that we're focusing on in 24, we're going to look to expand the number of bridges in the ecosystem, but make it easier for assets to move across the ecosystems. We continue to do work with the other participants in the Hedera ecosystem development to enhance EVM compatibility. And we're also looking at some new incentive models and strategies that could also help to stimulate growth. And finally, we're aware of a growing demand for ETPs for the HBAR asset from the institutional community. And so we're going to look at ways that we might be able to support growth there.
Mm-hmm. And speaking of growth, would be great to also hear from you on the funds that the HBAR Foundation has deployed and how you see these contributing to your 2024 strategy. So maybe let's start with the Sustainable Impact Fund, right? It has the ambitious goal of bringing the balance sheet of the planet to the public ledger. Could you elaborate on the foundation's expanded focus on sustainability markets for 2024? How do partnerships like with Dovu align with your broader goals in regenerative finance? What specific outcomes and impact are you trying to aim to achieve in this area in 2024? And how do you measure success in this relatively new field?
Yeah, sure. First, I'd like to gently challenge the notion that we have an expanded focus on sustainability for 2024. This is one of the unique characteristics, I think, of the Hedera ecosystem, and it always has been. Hedera has been investing in solutions for many years that solve some of the really difficult problems, climate-related problems. In particular, those around measurement and verification and reporting of carbon emissions and offsets and other related areas. And when we launched the foundation back in 2021 and we established the Sustainable Impact Fund, we became the first public network to have a dedicated major grant fund in climate, one that supported both infrastructure and applications, driving critical outcomes in the market. So we've had sustainability as a core focus of our work at the foundation since the beginning, and this will continue as we head into 2024. So I just wanted to level set that. It's an important area for us. In 2024, I think we want to build on some of the successes that we saw in 2023. You're working with folks like Avery Dennison and the Optima.io platform. I think we also see the SIF team, expanding to work with some of the registries, as well as partnering with validation and verification partners in the carbon markets. And I think we'll also start to focus more on emissions tracking, ESG reporting, and some biodiversity opportunities that we've been tracking as well. So measuring success here, success for us shows up in the overall growth in the number of applications that are deployed using the Guardian infrastructure. So that's the initial indicator. This will lead then to tokenized assets being deployed on Hedera in the form of carbon credits and emissions, which in turn also drives additional network traffic and transactions and overall utilization of the Hedera network.
Mm-hmm. And then you have the Consumer Engagement Fund, right? And it's more geared towards enabling high-quality Web3 experiences, redefining interactions between brands and consumers in the digital space, right? So how is the concept of ecosystem as a service evolving the way that brands engage with their customers through the Hedera network? Could you provide examples of how this service is fostering a new owner economy? I mean, what does it mean for the future of consumer brand relationships?
Yeah, happy to dig in on this one. This is interesting because you see a lot of interest from the brands in this space, and you see a lot of shoulder shrugging, not really knowing exactly what to do or how to do it to address these opportunities that they see with their customers, fans. Depends on the type of entity involved. But what we see is this opportunity to fundamentally change the way that a customer or a fan of a particular brand engages with that brand or the products that they sell, and the opportunity to get away from so-called surveillance capitalism that has been the prevailing model to date. And so the ecosystem as a service strategy isn't directly addressing this, but it is a sort of plug and play product suite of interoperable dApps that allows the brands to get started addressing the opportunity that they see to capture and create greater customer engagement and loyalty. This is around things like ticketing, rewards and incentives, entertainment, gamification, collectibles. All of those we think are capable anyways of being reimagined on Hedera. And so providing these modular components that allow a brand to get started really quickly is what we see, where we see the true benefit of the ecosystem as a service strategy.
And then on the other part, there's the crypto economy and the fintech and payment funds. These are focused more on modernizing economic behavior and improving value exchange through on-chain finance. How are these funds working to integrate traditional financial institutions into the on-chain ecosystem? Can you discuss the specific challenges and opportunities that this bring in traditional finance business models and infrastructure onto the blockchain, particularly in terms of privacy, compliance, and also for tokenization?
Sure. So I think, in a way, despite the fact that DLT and blockchain have been evolving quite rapidly over a decade now, I think there are still elements, especially when it comes to enterprise, that are still somewhat in their infancy. So I mentioned earlier, a lot of this is around how do we lower the barriers to entry and make participation in the Hedera ecosystem as simple as possible and as easy as possible. So some of our focus areas are very much around, wallets. We continue to develop our wallets, including non-English speaking targeted ones. Our SDK languages, we have Java, JavaScript, and Go traditionally, but we also have a whole lot of others. And there's a C++ one that's very much coming on board soon to simplify the transition from, I guess, enterprise-focused capital markets use cases who are building on C++. And this, again, was based on demand. On the custody side, we have Fireblocks, BitGo. We're always looking at exchange support for Hedera. In particular, transfers in and out of HBAR and tokens. From the tooling perspective, we have very close partnerships with the likes of OpenZeppelin, and we also support Ethers, which is some of the traditional EVM tooling. From the compliance part, we have Elliptic, Merkle Science, and in terms of bringing financial service infrastructures and platforms on chain, we're working with FIS, Oasis Pro. David mentioned we have a very, very strong focus on bridging, and ultimately, another piece that's generally ignored is the developer experience as well. So low and no code platforms. So we have JoGit as one of our grantees, and the challenge still remains that these are highly regulated entities, and sometimes there's even demarcation between the same entity, and navigating these challenges requires a lot of thought and making sure that all the relevant parties, like auditors, the regulator, etc., are engaged very early on and brought along on the journey. Interoperability is key. We've seen this both from the perspective of on-chain to off-chain elements, but also across network ecosystems. So the likes of Layer 0, Axelar, and so forth. So from an opportunities perspective, I think reach is a big one. It opens up traditional systems to new classes of users through new channels, and these being the Web3 channels. There's also implicitly a stack modernization. So there's a big opportunity to solve reconciliation issues between counterparties, easily form and execute consortia use cases. It's meeting the demand for instant cross-border, both from the FX and settlement perspective, and stablecoins, of course, and built on the Stablecoin Studio, of course.
And looking beyond the immediate goals for 2024, what is the foundation's long-term vision for Hedera, especially in terms of sustaining the growth, innovation in the rapidly evolving blockchain space, in the cryptocurrency landscape?
Yeah, it's a great question. I think we as a leadership team at the HBAR Foundation, we believe that the world will ultimately be tokenized, and obviously we'd like to see that happen on Hedera. So our efforts at the foundation are going to be directed at enabling this transformation to take place across all industries, old and new. And to be able to do that, We need to have the best user experience. We need to be the ecosystem of choice for developers. And we need to continue to identify and support, real use cases solving real problems on chain. So that's where our focus is going to be.
Awesome. Well, thank you so much for sharing all those insights. We've covered a lot, I think. So now to close, what can each of you tell us personally, what are you most excited about in 2024? And maybe we can start with you, David, if you're up for it.
Oh, sure. Yeah, I'm happy to. I think I've got a couple things I'm excited about. I'm excited about the prospect of the end of winter, and being able to work with the team and with partners and projects, in the space in an overall better environment when people just not as much doom and gloom. I think that'll be pretty exciting. I'm looking forward to the areas where we're focused. And some of the specific conversations that we're involved in that I think could provide serious momentum to the plans that we have to grow the overall ecosystem. And I'm really excited to see the projects that we've already that have already launched in our ecosystem, watch them continue to grow and be successful, and also see some of the projects that haven't yet launched get to mainnet and have that opportunity as well. And I won't play any favorites by calling out some of the particular projects that I'm focused on, but I've got a few that are sort of pet projects for me.
So I'd echo everything David said, but in a way, I think I'm most excited about the use cases we haven't seen yet, and in particular because of the fact that we're coming out of what was a very, very long flat spell in Web3 as a whole, but also now that the Bitcoin ETF ruling has come out definitively, despite that little hiccup on Twitter/X the night before. But I think the general sentiment, and this is subjective and somewhat empirical, is that there's a lot more positivity around the art of the possible now that there has been a definitive ruling. So I'm very excited to see what use cases come out of the woodwork that have potentially already been under development and under wraps that are going to come out of hiding. From the user experience focus perspective, there's so much that we're doing both to understand what our network is doing and what the other networks are doing and how Web3 as a whole is growing and the focus. And a big chunk of that is going to be driven by things like Project Insight and partnerships with the likes of our friends at the TIE. And I think all of this is going to be a very, very informative year, and I'm looking forward to learning. Yeah.
Awesome. Thank you, Viv. I think we have a very exciting 2024 ahead. So thank you, Viv. Thank you, David. And this concludes our first edition of our State of Hedera quarterly calls. See you guys in a couple of months. Thank you for tuning in.
Thank you for having us.
Thanks, Sasha.